Hey everyone, today we're talking about Excel's PMT function, which stands for payment. It helps you calculate regular loan payments based on the interest rate, total number of payments, and loan amount. For monthly payments, you need to divide the annual interest rate by 12 to align with the monthly payment calculation, because Excel needs the interest rate to match the payment period, and then multiply the number of years by 12 to get the total months, ensuring the number of payment periods also matches the monthly schedule. The PMT function then calculates the payment amount for each month automatically, giving you a clear view of what you need to pay regularly. Bankers and financial professionals love this function because it makes loan calculations fast and accurate. This is especially helpful when planning your budget or comparing different loan options. When the results appear, the monthly payment will show as a negative number because Excel follows a cash flow convention, treating money you pay out, like your monthly installments, as negative. You can also apply this formula to other cells by using the fill handle or simply double-clicking the first fill handle, making it easy to calculate payments for multiple loans or scenarios. If you like this video, don't forget to like, subscribe, and hit the bell for more Excel tips and tricks.